Hey everybody, welcome back. Now, in this video, we're going to look at how to make money in the crypto bear market. Now, this is the time to work on your cash flow and accumulate great projects at discounted prices. As they say, bull markets make you money, but it's the bear markets that make you rich. Now, there's no need to panic if you're low on cash. Chances are we're going to be feeding at these bottoms for a while. Historically, market cycle bottoms take a while to reverse, and this is the first crypto winter that's characterized by a terrible macroeconomic environment. Right, with high inflation and rate hikes, supply chain issues, energy crisis, war. And now we've got the contagion kicked off by the recent collapse of Luna and UST. In this video, we're going to look at how to make money and generate cash flow across CeFi and DeFi.
Oh, $20. I wanted a peanut. $20 can buy many peanuts. Explain how. Money can be exchanged for goods and services. Woohoo!
Everything from your bread and butter passive income vehicles like staking, lending, providing liquidity, to swing trading, to playing venture capitalist on new projects, to flipping NFTs. We're going to go through the full gamut. If you find this interesting, please give this video a thumbs up. It's the only way the YouTube algorithm notices me. All right, let's dive on in. First up, initial exchange offerings. I've talked about these a lot on top exchanges like FTX and Binance. Now, this is the most lucrative way to make potentially a lot of money in a short amount of time from a risk reward point of view, even in a bear market. Now, an IEO is where you buy brand new tokens at a private sale on these centralized exchanges before they go public. In essence, you get to play venture capitalist. This is where you get a chance to buy these so-called 100x gems that the large VCs themselves have already put their bets on. Now, the last FTX sale that I participated in a couple of months ago, a GameFi project called C2X, I blogged about at the time, ended up doing a 60x. Now, those who got in were able to flip their $500 investment into $20,000 to $30,000 just days later.
We are so rich.
Now, the next IEO is coming up in a few days' time, and I'm fairly excited about it. So the project's a DAO-based NFT platform called Crypto that allows anyone like yourself to create secondary content around popular IP brands that you can then monetize. To participate, you'll log into your FTX account, make sure your KYC is up to date, state some FTT tokens, and then go into the draw for an IEO allocation. Now, if you don't have an FTX account, I've got a link down below. We can get a permanent 5% discount off your trading fees. I've written up a detailed guide on how to participate in the IEO on my blog as well. So that's this article right here. Link in the descriptions. And hey, all good if you miss out on this one. They do run these on a semi-regular basis. And not financial advice, I do try to participate in all of these myself every single time, just because they're so lucrative. Now, overall, if we look at some data, FTX, KuCoin, and Binance, they run the most profitable IEOs, right? So they're the ones you really should be involved in. I've also talked about IDOs on this channel and on my blog, right? Initial DEX offerings. Similar idea to IEOs, except the new tokens are launched on a DeFi platform instead of on a centralized exchange. Now, if you want to learn more, check out the descriptions where I've covered well-known platforms in the past, such as TrustSwap, which launches new projects on Ethereum, Polygon, the BNB chain, and Avalanche. Next up for making money in a bear market is good old trading. Now, I want to stress off the bat that trading is not profitable for the majority of people, even during bull markets when prices are mostly going up, let alone bear markets. And adding insult to injury, the capitulations that tend to lead to a bear market in the first place, they tend to wipe out the newbies out of the markets, so you're mostly competing with the veteran traders for scraps.
Sorry we're late. Could we have the money now?
The answer is no.
So rather than straight up vanilla trading, what I like to do is a hybrid mix of swing trading and accumulation together, where I basically DCA into Bitcoin as if I'm an investor. I'll take profits on the way up as if I was swing trading. And hey, if prices break down, I'll simply hodl, right? Because I wanted to accumulate Bitcoin anyway. For example, while market sentiment still looks bad, I'll swing trade Bitcoin in the current sideways markets between 19 and 21K, where it's now at a favorable range for dollar cost averaging anyway. That's for the investors. And if the whole market dumps further and Bitcoin capitulates down to 16, maybe 13K or even lower, No worries, I'll buy even more because I was keen to accumulate Bitcoin over time anyway, at any price below 25k, in preparation for the next market cycle bull run. Maybe next year, maybe 2024, who knows. Personally, I find this hybrid trading accumulation approach to be a low stress, low risk way to take advantage of the current prices, where I'm basically happy whichever way the markets go. Similarly, I'll do this for Ethereum as well, where I'll do some swing trading around the market ebbs and flows of the current price action around $1,000. And hey, if things break down and ETH dumps to $700 or less, awesome, I'll buy more. I'll also do this for Cardano as well, and a couple of layer ones, and that's pretty much about it, right? So mainly the blue chips, the projects that have thrived over 2 market cycles. I'm only really doing this for high conviction assets that I want to accumulate for the next bull market. I'm not keen on accumulating most alts right now because number one, it's very hard to catch a falling knife, and number two, if history's any indication, most altcoins get absolutely destroyed in a market cycle bear market, right? Dying a slow death, never really recovering back towards their previous all-time highs. So you need to be really selective on what you invest in during bear markets, right? This is the time to cleanse, to detox, and to purify your portfolio. To be clear, in the 2018 bear market, the vast majority of the top 30 cryptocurrencies bled more than 90 to 95% and later into irrelevance, right? Something I tweeted about all the way back in April as a caution against buying dips during a market crash. Right? Remember, buying the dip is a bull market strategy. Right now, we're in a bear market and you need to change your mentality 180 degrees. If we look at the Ethereum killers back then, right, the up-and-coming layer ones trying to eat a slice of Ethereum's lunch, right, this everlasting narrative in the crypto space. So if we check out EOS back then, 2017, all-time high, 2021, it never broke those previous all-time highs. NEO, similar story, high in 2017, then 2021. Stellar, similar story. Tron, similar story. IOTA, similar story. Pretty much only Waves, which many people haven't heard about, and Cardano, which many people have heard about, ever reclaimed their all-time highs in 2021. And even then, Cardano has historically just kept pace with Ethereum since its, well, all the way back to its 2016 ICO, which means that when it comes to long-term risk-adjusted returns, well, you might as well just buy Ethereum. All right, if two investments have the same returns, but one has lower risk, well, you choose the one with the lower risk. I'm not hating on Cardano, I own it, and I like the project. The point I'm trying to make is the goal of an altcoin as an investment is to outperform ETH, and you'd be surprised to know that the vast majority of alts barely do, right? Even some of the popular layer ones. Here's the ratio of the total altcoin market cap to Ethereum's market cap. The fact that it's generally trending downwards over time, over several years, is telling you that as a whole, well, the altcoin space is struggling to keep up to pace with Ethereum despite Ethereum's large market cap. So that's why I'm mainly buying Bitcoin and Ethereum until the markets pick up, right? I'm not interested in trying to catch a falling knife on assets which have a good chance of never recovering their former glory when the bull market next returns. The risk-adjusted returns of Bitcoin and ETH are simply second to none. Also, until the macro reverses, and specifically I'm talking about inflation peaking, which is historically when markets have bottomed out, for example, in the 1940s and 1970s, the S&P, the NASDAQ, crypto, the ultimate risk assets, they're all going to continue to be choppy for a while. And this means that accumulating more Bitcoin can actually help you buy more of your favorite alts later on if that's what you're really keen on, due to the increasing Bitcoin dominance over time as the market slowly recovers. Right, one of the fascinating things about crypto is that, well, the notion of cycles tends to be a dominating theme. And right now we are part of the market cycle that's creating the next generation of Bitcoin maxis, a large proportion of which comprise the altcoin degens from the previous bull run that saw their portfolios bleed 90 to 95% over 6 months, which is very painful. All right, next up for making money in a bear market is earning a yield or an interest on your cryptocurrencies across both CeFi and DeFi using staking, lending, or providing liquidity. Now let's talk a little bit about staking first. Taking Cardano ADA as an example, proof of stake cryptocurrency, you can stake your ADA in your own Web3 wallet, such as Cardano's Yoroi wallet here, where you retain self-custody of your assets. Basically, that means you control the private keys to your own wallet, which due to some recent developments have become a major plus. Or you can stake on centralized platforms offering staking as a service. Now, if you go this route, you really can't beat Binance for class-leading returns. You've got up to 11% on ADA, 21% on Matic, 30% on Cosmos Atom, 13% on Solana, up to 20% on Polkadot and Avalanche, right? DOT and AVAX. Really good returns. The reality is, for the layer 1 cryptocurrencies, Binance offers substantially higher rewards than staking in your own Web3 wallet at the expense of losing self-custody. All right, so you just need to decide whether relinquishing control of your keys is really worth those returns. Now, if you do want to give Binance a spin, I do have a link in the descriptions, which will give you 5% off your fees. Personally, I've got some crypto in self-custody Web3 wallets and a bit staking on Binance as well. I don't put all my eggs in one basket, and I think that's a sensible thing to do for most people. If you are keen on some useful graphical comparisons,
Yellow color.
What's the pink?
Menstrual cycles.
Okay.
check out my blog and other videos where I did a breakdown for Avalanche, Solana, Cardano, and so on. I'll link these helpful articles down in the descriptions below. There's a lot of really good useful information that I urge you to check out if you're interested in staking these cryptocurrencies. Also, just want to quickly remark that staking during a bear market is actually the best time to stake to grow your loot. And that's because you're going to be taxed a lot less on your, for instance, ADA staking rewards when ADA is only worth a measly 50 cents instead of $3 at the height of the bull market. Right? You're going to be taxed a lot less on your Polkadot rewards when DOT's only worth $7 right now instead of $45 at the height of the bull market, and so on. So yeah, bear market, stake aggressively to grow your loot, right? And then bull market, time to sell your rewards if you do want to sell. The worst possible situation to get caught up in is paying taxes on your staking rewards that you earned at the height of the bull market by selling your staking rewards at the bottom here, right? The money that you recover down here is probably not even going to cover the taxes for the staking rewards that you earn up here. Very bad situation to be caught up in. Just be aware of that. All right, let's talk a bit about lending now. So aside from staking, you can also earn a yield by depositing your crypto into a savings or lending platform. You can then borrow against your crypto collateral if you want to, which can be a good way to multiply your profits if you borrow at the right times. But be very careful, as we've recently seen how lending out your crypto can blow up in your face, whether you're using a centralized platform or a protocol in DeFi. All right, now let's cover the CeFi platforms first, right? So these are the companies which are centrally managed, where you don't own the keys to your wallet. So the companies with good balance sheets after everything that's recently happened with Luna, UST, 3 Arrows Capital, and Celsius, I'd say are NEXO and Crypto.com. Now personally, I still use both these platforms, right? NEXO and Crypto.com, where I save some of my Bitcoin and Ethereum to earn a yield. And during market dumps, severe market dumps, I'll borrow against these assets to get some really cheap loans to help me accumulate more assets. Now, this is actually a well-known strategy which I've talked about in my blog, link down below, the so-called buy, borrow, die strategy that wealthy investors have actually used for centuries to grow and pass down their wealth. Essentially, they snowball their assets by making use of strategic debt by borrowing against their assets and taking out cheap loans, and then buying more assets with that money, essentially growing their wealth without ever having to sell their original collateral, which means a lot less tax to pay. An example of the buy, borrow, die strategy is taking out, well, super cheap loans or mortgages to buy a ton of real estate. Now, I'm not wealthy or rich by any means.
Are you serious? You earning this?
Plus perks, yes.
Mike, this is barely more than I make. You've been here 10 years, dog.
14 years.
But thanks to platforms like NEXO, Celsius, well, maybe not so Celsius, BlockFi, well, ordinary folks like you and I, we can now employ these strategies in crypto, taking out cheap loans to buy more crypto. Now, the key in all of this is borrowing at the right time. Can't stress that enough, which is when the markets have dumped hard, right? If you really have to borrow, that's when you take out leverage, instead of borrowing when everything is at all-time highs. Right, which is why so many people lose money in crypto by taking out leverage at the wrong times, getting liquidated, and then losing everything. If you want to know more, see my blog. I've written about the buy, borrow, die strategy, and I've compared all of these platforms. And if you are keen on trying any of these, Celsius not so much, But NEXO or crypto.com, right? I've got some links down below. We can get some free Bitcoin on your first deposit. But please, guys, manage your risk and don't put all your eggs in one basket. All right. My personal opinion is the majority of people in crypto should stay away from leverage, right, of any sort. Now, buy your crypto in the spot market, lock it away. There's only one thing more important than making money, and well, that's holding on to it. Okay, so now let's talk about DeFi. Right, so when it comes to reputable DeFi platforms to save or lend out your crypto to earn a yield, the blue chip platforms, right, such as Compound, Aave, Curve, right, they've really proven their resilience. It's interesting to note that these smart contracts-based platforms are the ones that came out pretty much unscathed, while the human-controlled centralized companies, right, such as Celsius, such as 3 Arrows Capital, burnt down thanks to the human traits of hubris and greed that ultimately saw piss poor risk management and the abuse of leverage. All right, moving on. Now, a third way to earn a yield on your crypto is by providing it as liquidity on a DeFi protocol. So starting off simple, I can contribute a pair of assets into a DEX, such as PancakeSwap. For example, here I can add BNB and Cake into the BNB Cake pool, and then I'll earn a portion of the fees that come from other DEX users swapping BNB for Cake and vice versa. Now, to offset the impermanent loss risk, because chances are the relative price of BNB versus Cake, right, as we can see here, will deviate over time, since both are risk assets with drastically different market caps as well as use cases. So there's a good chance I'm going to see some noticeable impermanent loss. Well, to mitigate that, I can stake the resulting LP tokens into a farm on PancakeSwap as well, right, to generate a further yield. So a second source of passive income, basically to reward me for taking on those impermanent loss risks. Now, if you want to avoid impermanent loss altogether, I'd suggest checking out Curve, which is one of these major DeFi platforms in crypto that's well known for having lots of pairs whose assets are similar to each other, which means their relative value is not going to deviate so much, which means very little impermanent loss with your investment. Now, if you're scared of Ethereum's crazy gas fees, like many good DeFi protocols these days, you can use a layer 2 scaling solution. For example, Polygon, right, a sidechain. You can use Arbitrum or Optimism, right, roll-up solutions. Or you can use some of the old chains like Avalanche, Phantom, and Harmony. Right now, I'm using Curve with the Arbitrum Layer 2 scaling solution. Now, speaking of similar pairs, so here, right, we can see a pair that's essentially two different versions of Bitcoin, which means pretty much no impermanent loss. If we look further up, here we've got a nice stablecoin pair, right? USD coin plus USD tether. Again, no impermanent loss, essentially. Now, to get the full yield, which is roughly 2% for both the stablecoin pair and the Bitcoin pair, what you actually need to do is to take the incentive token, CRV, which is handed out by Curve, and essentially compound it back into your LP position on a regular basis to hit that 1.94% APY. Right? APY, that's the compounded return. Now, you can automate these strategies and compounding cycles on yield optimizer platforms such as the multi-chain Beefy Finance, a very popular DeFi protocol. So this is a platform which basically scans across all the different DEXs, across all these different chains here, along with token pairs and incentive tokens, and basically wraps the DeFi steps and strategies up into a neat little one-click package. So that number one, you don't have to log onto Curve like we did earlier and manually compound your rewards every day yourself, because it's going to be all automated. And number two, the yield is actually even better than doing it yourself, right? Because Beefy can leverage their economy of scale and basically compound the rewards for thousands of us lenders all at once, right? So this saves a lot of individual gas fees, which are then returned back to us in the form of higher APYs, right? So that's why Beefy is called a yield optimizer platform. So if I go to Arbitrum, I can find the USDC USDT pair that I saw on Curve earlier right here, and you'll notice that instead of paying just 1.94%, it's paying out roughly double that amount, right? Thanks to all the optimization that's going on there in automating the strategies and automating the compounding cycles and saving on the gas fees. So in summary, if you want to earn a yield through providing liquidity, you're kind of lazy and also want the best returns at the same time, and you want to hold on to your own private keys, which means no centralized companies, well, Beefy Finance here, that's going to be your gold standard. Alright, finally, I'm also earning a daily passive income on move to earn apps such as STEPN, which basically pays you crypto to go outside and get fit and healthy. So the way it works is you buy a set of NFT sneakers and then you go on daily walks or jogs. Earn crypto, which you can either cash out or spend upgrading your sneakers. Now, I've made a whole video on STEPN, which I suggest you check out. These apps have quite amazingly transformed my life. I'm now motivated to go outside every single day, rain, hail or shine, to get my daily walk in. I've lost weight, I'm sleeping better, my mental health has improved, I'm more productive at work, and I'm making around $50 a day doing so by cashing out my daily crypto and mystery box earnings. Now, even better, on some days I can earn a couple of $100 extra from flipping NFT sneakers in the marketplace as well. Right? I find that there are always people selling their sneakers with great stats at bargain prices. Maybe because they're in need of cash in a hurry, or perhaps they just don't appreciate how good their NFT sneakers are. For example, I snatched this one up for about 16 Solana at the time and was able to resell them on the same day for 26 Solana. Right. This pair here snatched up at 12 Solana and flipped for 20. If you play STEPN, you'll know that 4 efficiency gem slots are very good at earning GST, and the base stats on these sneakers are quite good too, right? So immediately I knew the folks who were selling these at floor prices didn't really appreciate the value of their NFTs. Overall, the key to flipping NFTs is understanding your niche well, whether it is STEPN or another NFT ecosystem, right? So you know what's in demand and what's undervalued, what's hot and what's not. Alright everyone, let's leave it there. I hope you found this video useful or entertaining. Consider dropping a like if you did to support the channel, I'd really appreciate it. As always, nothing here is financial advice. Have a great day or evening wherever you are, and hope to see you in the next video.